A wealth of evidence by leading academics and Nobel laureates inform us that trying to time your stock selling and buying trades is a fruitless endeavor. Along these lines, working with our preferred funds provider, Dimensional Fund Advisors, IFA has developed a short list of tips for investors to make their financial lives easier and more fruitful over the longer term. We're fortunate to have with us today Michael Humbert, a veteran dimensional investment strategist. Hi, Michael. Thanks for joining us today.
Thanks for having me, Murray.
Sure. Let's start with possibly the most obvious, but also an often overlooked suggestion. That is, understand that market prices are the way free markets structurally are set up to work, correct?
Absolutely. Market participants, every day they buy and sell. They reflect their expectations for the future in aggregate in market prices. So market prices, in plain language, they represent our best understanding of the future going forward.
Okay. And also one of the suggestions that IFA wealth advisors really like to make to their clients is to not try to outguess the market.
We see that those managers who try to outguess the market, who try to end on price rather than begin with market prices, we see that over the long term, 10, 15, 20 years, not only do they not outperform, but many of them don't even survive. Well less than chance alone. The percentage of managers who survive and outperform is well less than would be implied by chance alone.
And then also, of course, along with that is resist chasing past performance.
Absolutely. It can be tempting to buy into that fund that has had great top quartile performance over the past few years. But what we see is that information is not persistent over time. Those managers who were top quartile performers over the past 5 years, do they remain in the top quartile over the next 5 years? We don't see that. We see, again, well less than chance alone, those managers who were top performers in the past. Do they persist in the future? It's well less than a coin flip.
Yeah, IFA were big on telling investors to really focus on the drivers of long-term returns, such as company size, relative price, profitability with equities.
And we would naturally agree with that. We really want to focus on what there's been decades of empirical research and academic research and real world experience about that have developed our understanding of those known drivers of expected return. We expect them to be evergreen. We expect them to be applicable in all markets through time. The volatility of equities and fixed income may make it so that they're not always positive, those premiums, but consistently positioning yourself towards them, we believe, is a great investment philosophy.
Okay. Well, thank you for your time today.
Thank you for having me, Murray.